Now we begin with commodities. Okay, copper prices falling 2% this week as stockpiles grow. That's the third straight drop after a 7-week rally in copper. Oil, the price is gaining there. But the biggest move of all is natural gas. Natural gas futures prices rising almost 30% this week. That's the most in about 3 years. All right, let's get some expert analysis. Let's bring in Lawrence Eagles, Global Head of Commodities Research at J.P. Morgan Chase. Lawrence, stopping by. I know you're doing a lot of international traveling. What's the state? Let's start with industrial commodities for the moment. We mentioned copper. Let's start there. What's the likelihood that we're going to see any kind of continued run in copper prices?
Well, this is really the world recovery story. We're definitely seeing commodity prices at levels which I think 6 months ago would have been unimaginable. And a lot of that has been propelled from the metals and some other commodities by China. They've been very dramatic buyers. And if you look at some of the demand even for oil from China and other commodities, very strong indeed. But there was always the suspicion that China was buying up a lot and its imports would be slowing in the second half of the year. Quite often it tends to do that seasonally anyway because of some of the technical difficulties of getting import licenses. But we're definitely seeing a bit of a slowdown. I think that's taken some of the heat out of some of the commodity markets. But if we're right in seeing, and we're seeing a lot of signs that the world economy outside of the US is picking up, and if the US can fill that jigsaw slot, then we've got other people to take up the slack. And that's a good sign, but we do have to remember that producers also shut in a lot of commodities as well, and some of them are going to be starting to think about whether or not they should be adding a bit more supply to the picture. So there's two sides.
In other words, they were waiting for those higher prices, so they left the commodities in the ground to kind of see where the prices were going to go. Now that the prices are higher, they ramp up production again.
Exactly. And the biggest turnaround, as you said, in the week has been natural gas. The rise we've had there, phenomenal, 30%, but 30% from a very, very, very low base. And I think what we saw is just some really competitive, opportunistic buying, switching away from coal for power generation into natural gas. We've seen some shut-ins seasonally where we've basically passed the worst point of the stock builds for the season. You start to get colder weather kicking in, boosting demand. So not really surprising that we've picked up a bit. But if you compare natural gas prices today with the prices over the past 5 years, they're still pretty low.
All right, look into the future for us, though. If you compare natural gas prices today with what they might be 6 months from now, what do you see?
I think when you look at natural gas prices, there are the seasonal peaks and troughs, but you have to say this is a very competitive and dynamic market, not just in the US, but also internationally as well, with a lot of new LNG capacity coming on stream. Demand recovers, that will help. But with all this competitive new supply on, I think we've got to look forward to a future where the highs are going to be a lot lower, and we're going to be looking at a lower average price as well.
All right, so what about when you look at some of the other industrial commodities? Let's talk about iron ore, for example. I know you're headed over to Asia. What's the outlook for iron ore? Still demand going to be robust?
Iron ore, I think, iron is really the linchpin of any economic recovery. But it's had that sustained infrastructure suck in from China, and it's up to the rest of the world now. So again, spare capacity in the steel industry. Steel prices have come off their highs in China. I think there's the potential for prices and demand to be supported, but again, we've got this spare capacity overhang. And it always takes a while in commodity markets to work that off. And I think the bigger question is not, are we seeing strong commodity demand over the next 6 months, but what's going to happen towards the end of 2010, 2011, and what happens to the economy at that stage? Are we going to have a rapid recovery? Are we going to be able to sustain it for 3 or 4 years, or is it going to quickly turn down again? And I think that's the bigger issue that's troubling people.
All right, well, we're going to have to see and wait what happens, and also look forward to getting your report. You're going to Asia. Have a great trip, and look forward to getting some reports and some insight as a result of those travels. Thank you very much, Lawrence Eagles. Thanks. Coming in from J.P. Morgan Chase, Global Head of Commodity Research. Thank you very much.